Nobody talks about the death of the dollar, but they'll talk about how strong it is relative to other currencies. That's garbage, because what really matters to you and me. Now look, if you're traveling, okay, you got a little advantage, except everybody globally is inflating away their currency. You cannot inflate this away. You can inflate away a currency because you push a button and you can create trillions and trillions and trillions and trillions and quadrillions of dollars. But there's a finite amount of gold and of silver. There's a finite amount of it.
In stable times, at least 10% of your portfolio should be in precious metals like gold and silver for diversification purposes. Stock market volatility aside, the value of the dollar has continued to fall. What does this mean for anyone who has cash reserves in their bank? A corresponding loss of purchasing power. Precious metals, which have risen in value in recent years, can offset this loss, and investors use the inverse relationship to protect their portfolios. Precious metals are a way to hedge against inflation and can even add stability to retirement accounts. In today's video, we will share why Lynette Zang believes only gold and silver can protect you in the recession, not stocks or bonds. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update.
This is the end of the currency's life cycle. So what if the stock market goes to 5 trillion? 5 trillion times zero is still zero.
The stock market crash of March 2020 hurt countless Americans. Retirement accounts that took decades to generate tracked market performance with double-digit losses. The current state of the economy shows strong buying signals. The dollar is falling, and some pundits are predicting further downside, and for good reason. Physical gold and silver are financial insurance against inflation, providing the ability to lock in a specific rate. That said, gold has outperformed the S&P index since 2000. This may be the end of the currency's life cycle. What if the stock market goes up to 5 trillion? 5,000 trillion times zero is still zero. Nobody talks about the death of the dollar, but about its strength against other currencies. If you travel, you have a small advantage, except that everyone in the world inflates their currency. You can't inflate that. You can't inflate a coin because you push a button and you can create trillions and trillions and quadrillions of dollars. That there is a finite amount of gold and silver, and these two elements are used in all sectors of the world economy. So there is always a critical demand. Dollars are only used in a trade zone. That is why it is so important that central banks maintain this level of confidence. It doesn't matter how many dollars you have. In Zimbabwe, there are billionaires and trillionaires, and they can't buy eggs. The Fed is fighting inflation to cause more economic damage than expected. The contradictory phase of the global financial cycle is now underway. It is a constant and pressing problem that has occurred to you personally since the day you were born. You were born into this lie. You've been fed this lie your whole life. It's hard to have a paradigm shift. The Fed will fight inflation as long as it takes. They created it, and there's only one way. One way to fight inflation, and that is with deflation. The price of gold could reach around $2,100 per ounce from its current price of around $1,800 per ounce by the end of 2022. However, the price of silver could reach $40, which is roughly double its current level if they meet certain conditions. We agree with the Wall Street Journal and therefore believe that gold and silver bullion have their place in every portfolio. A general rule of thumb is to invest 5 to 10% of your portfolio in gold and or silver. These precious metals present no credit or default risk and act as investment insurance in times of political and financial instability. With rising inflation and market volatility ahead, preservation of capital, especially through gold, may be prudent. Unlike many investments, the investment horizon for gold should be at least 3 years. Ideally, it should be treated as a strategic assignment that adds long-term insurance to your overall financial plan. Gold bullion as an investment is slow and steady. It is not a get-rich-quick scheme. Since 1971, it has provided an annualized return of 8.2%. If your goal is the preservation of wealth over time, which is easily passed down from one generation to the next, gold and silver bars are excellent vehicles.
This is a constant and compelling issue that has happened for you personally since the day you were born. You were born into this lie. You were fed this lie your entire life. It's hard to have a paradigm change.
That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for